Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. If you want to get notifications for when we go live 30 minutes after market close. You can tap the bell if you want to get notifications, that is. If you're not yet a member of our free options trading group, the link is below. Also the link to our Discord as well. Both are pretty active. Post my trades in both. If you're here right now, say what up. I see Kit, Callum, what's going on? How's everyone doing? Getting things going here. Happy Friday, everyone. Greg, nice to see you, man. Nice to see you. FC, JDM, Alex, welcome. King Jacob, trying to make Ray Lee, Josh. Man, we got the core team here, the A team. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Richard, what's going on, man? Brent got paid. So, yeah, I got paid today, but I feel like I learned more lessons this week than getting paid. which is you know, it's good to get reminders, but you know, you don't want it to continue. Ahmed, what's going on? Oh yeah, Richard got paid for sure. Richard got paid. I think he was down at open, but I think he recovered. King Jacob sat out but got paid this week. Learned a lesson sometimes. The best trade is no trade. Yeah, I would agree. I would agree with that. Like today the video is going to be about adjusting strategy and when the stock market changes. And obviously, I feel like this week the market changed in some way. Now, like the charts and everything like that are still intact, but the way that the market moved, I think we can all agree, the way that the market moved this week was way different than what we've been used to since October. So, you know, and I think a lot of people struggled this week because we were definitely used to kind of churning and burning really rather quickly. And then when the market slows down, obviously like VIX gets lower, but things just kind of slowly go up, you know, and it's day trading definitely makes it a lot harder. You know, so, you know, to kind of get into things here, today I'm up $100 on the day. You know, yes, it's a win, but I wouldn't say it's a huge win. You know, this week I did the math in Discord. You know, when all is said and done, I'm up only like $50 for the whole week, and I'm talking between all my accounts. Like I'm only up $50. Which is kind of flat, which, I mean, it's better, definitely way better than losing money. Like, don't get me wrong, I'm not complaining. To still be green after what we've gone through this week, because most of this week, my deltas have been short. So, you know, when you're short deltas and we have a up week, you know, we had a pretty big up week. S&Ps went from 2474 to 2596, so we had a 120 point swing on the S&Ps. Obviously, if my deltas were positive, we would have made a lot more money, but because my deltas were negative pretty much all week, just because I thought we had a lot of fake outs and we had a lot of things like that, and you know, I was obviously playing the downtrend. But to still close out the week like positive $50 after it not going my way shows me that my protections are in place, and my protections saved me. Even though my assumptions were wrong, my protections were in place, and that's what saved me. That what saved me a lot of, you know, it was what protected me. Richard, man, thank you for the $10. Really appreciate it. Richard, man. I'm gonna have to fly you out to the Bahamas or Punta Cana or something with all the donations you sent me. I appreciate it though. Thank you. Amen missed my entry twice, so no trade today. Rayleigh up 300 on the week. Nice. George, what's going on? Crypto Slice, another flat day. And I've been bullish on the calls. Yeah, I mean, you know, we'll go through the trades here, and really, I was happy that my defense protected me this week. Yeah, we could have had some losses. Yes, if Netflix didn't gap up like it did, we would have incurred some more losses. You know, but regardless of how the week went, I think we can say that we traded safe. I don't think we traded as smart like we talked about yesterday. Like, you know, at open, I should have took gains, and I didn't. Instead of being up $100 in the day, we closed down $100 in the day. And there was a lot of decisions, a lot of reminders, a lot of lessons learned in that regard. And, you know, we all make mistakes. You know, I think we can say that if you're not going to be there in this type of market, if you're not, especially low volume markets, which we're experiencing now, if you're not going to be there at market open where most of the volume is, you know, probably don't have a trade that you need to close out at market open. Then is one of the things that I took away this week. PB, what's going on? Nice to see you again. Glad you're here. But today, let's go through some of these trades. Sergio, $2, man, thank you. Kit, stream better be great quality because we spent a lot of freaking money on this setup, and I don't, except for this keyboard and mouse, I guess is a Logitech issue where I might just return it and get something else. But PB, where have you been? Have you been hiding out? I know a lot of people have been taking off for the holidays. Brian, he got married. You know, a lot of people been gone, but there's also been a lot of people here, and obviously, you know, like FC is here day in, day out. It's just you guys are crazy. Doing a lot of learning. Yeah, nothing wrong with learning. Jessica, how you doing? Yeah, if you're new here, say what up. Welcome to the UVH family. We want to meet you. The best thing that I think anyone can testify here is to get connected, join our Facebook group, join our Discord, get connected, learn from the people here. You know, it's the UVH fam is a great community. I'm actually really impressed, you know, by the amount of quality people that we have in here. You know, as we know, like most of the internet's full of trolls and stuff like that. But the people here, you know, they care, they answer your questions, they trade along with you. You know, I guess see for yourself. If you don't like it, then it's not for you. But the positivity is flowing within the UVH fan. Yeah, Brian took the plunge. Light them up. But yeah, let's get into this Netflix trade here. Let's get this up and running. Sorry, I'm going here. So yesterday I opened a Netflix strangled like at 2:48. So near close, only 12 minutes left in close. I opened it for 277. I closed it out for 490. Obviously, I only closed the calls because maybe I thought maybe it was going to come back down. Plus the calls, the puts on this strangle were pretty worthless. I had the 327.50 calls, and I had the 315 puts. And this trade, so it cost me 277. I closed it out for 490. Now, those puts, let's go into Netflix here. Those puts at close, they were trading between 850 and 1250. Kellen, we traded all day. So I closed it out. I closed the call out for 490, and it traded up to. Let's actually look at those calls here for a second here. Let's look at these. Let's look at these calls. And you could say, yeah, you should have let it run. You should have did, you know. But I'll explain my reasoning here. Just a second. Let's get this popping on these calls here. So this is today. We'll go into today here, and we'll go into the last couple days. So yesterday, I opened a position on Netflix. It closed at like 324 and some change. And then last night, right after close, which was kind of shady, there was, I mean, directly after close, the market closed, the news came out, UBS upgraded Netflix, and then this morning some other people upgraded Netflix. They followed suit. Always kind of strange. It's always kind of strange to me when a company gets upgraded pre-earnings. Normally upgrades come after earnings release, so it's very strange. I mean, I could see why people think that. I could see why people think that, you know, Netflix is undervalued and stuff like that. But it's very odd to me when a company gets upgraded, you know, pre-earnings. Don't forget that, Jar. Don't forget that, Jar. Charge enter right before the bell, sell at the open. Yeah, so I sold it directly at open, and the reason why I did that, because when I opened the position, it was, I would say it was probably a pretty risky position because it cost $277 per account. So I did this 4 times. I was about 1K deep in risk, and these expired today. So, you know, when things expire today, yes, I was in the money, but the movements, the deltas, the theta, it gets really aggressive when things move against you. Obviously, when things move for you, you make money quicker because you buy something undervalued, and then when it gets in the money, you start kind of snowballing some money. However, when that starts going against you, you hit some, it's rapid. It's very rapid, and as you can see here at open. So what I did is, because I knew we were going to gap up, I was afraid Netflix, if you guys were trading this morning, one thing that I was afraid of is the Netflix was, the market was red. Dow was down like 100 or 80 or something like that. S&P, NASDAQ, everything was red. Netflix was green by a lot. You know, Netflix was up like, you know, 2.5% or so. And it was up pretty big. So I was afraid of, you know, we're going to have the pop up and then the fade, or the pop up and sell off, you know, and when it gets like that and you're holding, so like basically in a position like this, you know, you're holding like a ticking time bomb. You're like, okay, this could either go amazingly, it could go, I could get the price that I want, or if it opens and you wait and it goes against you, then you start having some trouble. So what I did for this position is my mouse died. What I did was I put my order in pre-market before market open of a price that I wanted to pay, and you know, 2 out of the 4 accounts got filled at the price I wanted to pay. So that's why I don't feel bad about it going up, because it was whipsawing so crazy here. I mean, if you're looking at just today, you know, it opened at like 331. It kind of closed at 330 here. It went all up to 334.99, came back down to 328. And actually on one of my other accounts, when it came back, so one of my other accounts didn't get filled, it came back down into here, down to like 328. And then it was looking like it was going to head down lower. You know, that one got, instead of the 490 fill, it got filled for 370. Still made money, but it got filled for 370 instead of 490. And that kind of shows you how crazy the pricing gets. And as you can see here, you know, within the first 15 minutes, Netflix, you know, it went from 346 up to 811, back down to 421 before obviously kind of going up to 13, you know, a high of 1320. So you could say, hey, if you held on, you would have made $1,000 per account. You would have made $500 more, whatever the case is. But when you're this could have easily gone back. Like Netflix could have easily retraced back down to 325, and then you would be calling me stupid that I didn't take the money. You know, so especially on expiration Friday. On expiration Friday, you have to really reduce your risk and really get aggressive. If you're in a winning position, you need to really get aggressive and get ahead of it, because easy come, easy go. Like, you know, the pricing, and then when you're holding that option, you watch the pricing kind of go back and forth. Luckily, I put my pricing in right at open, as actually filled right here on this account. Let's see here, Netflix. Where's the timestamp? Yeah, I mean, if you look at the timestamp is 8:30 and 0 seconds. Directly at market open, I got filled. So that's why I like to, when I have positions like this, I like to, you know, since I'm pretty good at option pricing, I already know what price is going to be around, you know, at open. Even when it gaps up or gaps lower or is in my favor, I have a pretty good idea on where it's going to be. So when I put my 490 target in there, I actually thought it was a little high. I thought we were going to open it like, you know, the option price was going to be like $4 or $4.50, and then I was just going to have to, like, you know, right click and replace it and go down to like $4.50. But 2 out of the 4 accounts immediately got filled at 490, which definitely saved me some headache of kind of adjusting. But it was just crazy. So that's why on these positions, and it's expiring today, you know, IV's aggressive, theta's aggressive. Yes, we made, you know, I double my money on that position. I'm definitely happy. You know, could it have been a triple bagger, like, you know, 200%, 300%? Sure. But I mean, there's no point in putting that type of risk on. You know, take your gains and redeploy, like we were talking about yesterday. You know, take profits and redeploy your capital. Take profits, redeploy your capital. If you have losses, it gets harder to take your losses and redeploy capital than it is to take profits and redeploy capital. So, you know, just keep that in mind. Are you going to play earnings on Netflix? No, I'll play after it comes out. The way I've been working the last couple quarters that's been better for me is trading stocks after earnings. Yeah, I wasn't trying to keep bringing it up to him. Yeah, Josh FC. I don't feel bad that it went to 1320. Like, I don't feel bad about taking gains, because the amount of risk that I was exposed to, you know, it could have easily went against me. You know, I had a lot of risk on at open, so I wanted to reduce the risk. You know, when I'm in a winning position, I immediately, you know, my brain is telling me cut risk, especially on a Friday. Last couple of Fridays have been really good to me, but the only reason why they've been good to me is because I took my risk off. FC, the one time I put in order in pre-market and it got filled, ended up being the high of the day. That could have easily been the case here. Yeah, when I put it in and it got filled instantly, it could have been the high of the day, and we could have just lost money. And I looked, you know. So that's why I traded it that way. You know, for the people that are going to ask. This was definitely the trade of the day. You know, we had a nice gap up in the money, real nice. But I didn't want to. You know, I'm not risking it for no biscuits here. We're gonna take our profits, and next week I'm gonna take those profits and I'm gonna use that capital to build more capital. You know, like I was saying, the less capital you have, like if you keep taking losses, a lot of you start to understand that if you keep taking hits, it gets harder to get back up to where you were, because you need bigger percentage gains to get back to where you were. So the worst is closing a loser, but it turns into a winner. Yeah. But Brian, you know what hurts me more than that is, you know, when I close out a loser and it turns into a winner, that's just because I'm managing my risk. What hurts me way more than that is when I have a winner and I close it out for a loser. So I had more money in my account than I started out with, but then I gave the market back. I gave the market back all that profit and then part of my account. I cannot stand that. Yeah, Chetan's got it right. Sergio. I'm just saying because I use Tastyworks and it only allows me to enter one deposit and figure that out today. Lock the profit. Yeah, so that was the Netflix trade. I mean, for earnings, I mean, I think Netflix, if we're gonna go into Netflix here, you know, it's had an amazing run from 230 337. I mean, it had like one down tick in the last 10 to 15 days. I mean, it's just like, it's just insane. And people that are shorting it and people that are trading this short or whatever, you know, you have to understand Netflix and like Tesla, they're irrational. They don't care about your positions and they're going to do what they're going to do. So either get on board with it or, you know, this could be a great short. I mean, this could go from 337 back down to 240. I mean, definitely could. But it did pop up above this 329, did gap up and didn't look back. You know, Netflix is always one of those stocks pre-earnings, it runs up. Even for the long term, like if you're looking back here on, let me show you back in here. Back in here, we had a run up before earnings, and then they had the gap up. You know, right here, right in here, we had a little bump before earnings, and then it sold off. And then in here, right in here, we had another run up before earnings, and then before kind of going on its downtrend there. So Netflix, you know, if you're looking for trade ideas, Netflix is one of those stocks that you can count on. I'm not saying it happens every time, but if it's been selling off, look for their earnings date, and then you can kind of trade the pre-ramp up to earnings. So you don't have to trade earnings. You could trade the before earnings, and then you could trade after earnings, and that way you can kind of take advantage of both sides. So, you know, that's one advantage. Like a lot of stocks right now, I feel are being ramped up for the earnings. And I did post in the Discord the calendar for January for like the biggest companies. Like this week is light, but starting next week, we're going to have all the banks reporting. Netflix is reporting next week. A lot of stocks are starting to report, and it's going to push us into February with these major stocks. Like we're going to be starting next week, we're going to be nonstop, you know, reporting earnings for the next month. So for the next 4 weeks, starting Monday, for the next 4 weeks, we're gonna have some great opportunities here. Even though the market may be slower, we're gonna have some great opportunities. Let's get into these other orders here. Microsoft, I closed out today. I took a $7 hit on it. I opened the 103 put and the 104 call. Closed it out for, I opened it for 94 cents, closed it out for 87 cents. And the reason on Microsoft, it just went down, really wasn't going down any lower. I could have been more patient, but it expired today. So I really just wanted to cut and run, just take, you know, break even and leave it alone. And then we'll re-enter Microsoft at another time. IBM, so I opened up some trades for next week. I opened up IBM, I opened up GE and Caterpillar. And, you know, I know we'll talk about GE for a second here. I know for GE that I said I wasn't going to trade it unless it's above $10. I had a pact that said, don't trade GE. I had some nice wins on GE last year. You know, it was a great stock. I mean, I had some 500, 600% winners on it. I mean, it was not bad. But down below $10, I was kind of having some issues making money. So I said, you know, I'm not going to trade it below $10. But let's talk about GE here. GE's been having some trouble right here around the $9 range. And if you're looking up here at the 1 year chart, you know, we've had some issues back here where it hit 9 and actually headed back lower to 666, unfortunately. And now we're back up here. And if you're looking here, like this week, it touched the 9s once, almost touched it yesterday, and today it just couldn't get it. However, I mean, this does look kind of like a coil up, but really did nothing all day. So it was a good, like days like this are good days to put positions on. Flat days, when you're buying premium, flat days are good days to put positions on. Sergio, thank you again for another $2. I really appreciate it, man. Thank you. Man, you guys are too nice to me. You guys are too nice. So the reason why I did it is because it keeps tapping 9 there, and as you guys know, I like to play support. I like to play resistance. I love support and resistance plays, and this one I just couldn't pass it up. So I bought the January 25th 8 strike puts for 8 cents. So, we'll see what it does. For like a single digit stock for like GE, anything like $20 and below, you really want to give it time because it takes a long time to get there. Like we're talking, like if you want to head down to $9, we're talking about, I'm sorry, if we want to head down to $8, we're talking like 10% move. And as you guys know, 10% moves aren't happen every day. So, we did go from 8 to 9 in a couple of days, but you gotta kind of err on the side of caution. So that's why like stocks that are penny stocks, basically, you want to give it time to get to where you want to go. There's a lot of bad press. GE hasn't transformed. The only thing that they have going for them is there may be like a pre-earnings ramp up, but I think right now for like hedge funds and all those type of things, GE is kind of toxic. If those funds haven't exited, they're trying to, because if you're looking at GE here on the 1 year, we're down 19 went down to 6, and now it's back up to 9. So this is for hedge funds and stuff. This is definitely become a toxic stock. So just keep that in mind. So yes, you could have people made money going from 6 to 9 and stuff like that. And for me, I don't like to go against my assumptions. And right now, my assumption is that GE is probably going to go to $5, and it almost went to $5. I've been saying for a long time, GE to 5, and then went down to 6, and here we are. We're at almost 9. So we'll see what happens. Then the other trade I did today, I did Caterpillar, cost me $1.73. I opened the 134 call and the 126 put for next week, and this will kind of go into my spiel for the day about kind of transitioning what we're looking out for here. But for Caterpillar, the reason why I opened it up here, if you're looking at today's chart, we had this nice coil up action here. The play I did was a bullish trade, so it was definitely on the side of being bullish. If we pull up, let me pull up the my position here so you can see it on Tastyworks. So you can see here that the expected move, I'm inside the expected move on the calls, outside the expected move on the puts. The only thing that you got to be kind of concerned about is volume on Caterpillar isn't that great. But however, the bid and the ask, when the market was open, the bid and the ask was only like 5 cents, so it wasn't that bad. But to kind of go into things here, what I'm looking at on Caterpillar was to go up to 134. We had a couple times it spiked up to 142, up here 136. I really would like just to go up to like 135 and exit my trade. 135, 136 area is my target area for next week. One thing about Caterpillar, they're very exposed to the tariff wars and all that kind of thing. So if you haven't traded it before, be cautious, just like anything else. But what I was saying is, adjusting strategy when the stock market changes. One of the things that you got to look at, especially when the bulls take charge here. We're looking at SPX. We had a lot of nice two-sided action here. But as you can see, we had some also two-sided action here as well. But as you can see, as we got to, let's say, 25, 30 on the S&Ps, the days started to get slower. We started to move slower, slow and low. And I've been telling you guys for a few weeks now, like, we've been having crazy action for weeks or months. Be cautious of loading up and us having a flat day. Be cautious of us loading up and the stocks don't move. And S&P is closed down 0.01%. Dow is at 0 right now. NASDAQ, basically unchanged. you gotta be very careful about that. A lot of stocks were unchanged. Some were green, some were red. But essentially, on days like this, where we kept knocking on the door here, it was kind of reminiscent of 2017, where we had low volume. We just kind of grinded back up, and it was just, it is what it is. Matthew, what's up? Got paid. So the one thing that's been pretty interesting here is the coil charts. And what I mean by the coil charts, if you were trading in 2017, there was a chart that was like a coil up, and it really what was the market was just condensing, and then one day it would just like lift off. So it would condense, however, still making an uptrend. And if you're looking here at the S&Ps, we're like today, this is what I would call is a coil up. We didn't bounce up or anything, but we're coiling up to kind of break out, unless obviously we get some negative news or something happens within the government or whatever. But right now, that's what the chart is telling me. And if you look here at NVIDIA, so I know some of you guys made money on NVIDIA this week. If you're looking at NVIDIA, there was a couple times here that there were some coil ups and you could have made some money. And these charts are definitely pretty interesting. So yes, it went from 147 down to 137. But if you're looking right in here, we're having some nice coil up action. And then the next day we gapped up and ripped. Did give it back, but there's opportunity here. We have the coil up here. We have the coil up, the gap up, the rip, and then so the coil up is definitely very, very, very bullish, as you can see here. And another time that it happened, if you're looking at the chart here, this is not as tight, but this is definitely bullish as well in terms of coil up. And if you're looking at the chart from like a 5 days perspective, you can kind of see how these coil ups are happening here. And this is why it went from 129 to 149. And when the range gets tight like that, and the lows keep getting higher and higher and higher, and just gets tight, eventually it explodes. Now, I'm not going to say it happens every time, but I'm saying from my experience and trading all of 2017, this was very frequent, where we're just like condensing, and then we exploded. And that's why the S&Ps were up 30% that year. It's not because we made it all in one day. So this week being bearish and going against the market, yes, it was harder. I didn't make big gains. I made $50 a whole week across my accounts. I mean, terrible, but basically flat. But I didn't lose, so I'm thankful for that. But I started noticing the patterns. I started noticing that, hey, the market has started to shift. The market has started to change. And when the market starts to change and your strategy starts, like if you're losing more frequently, let's say you were winning a pretty decent amount, then you start losing with the same strategy, you kind of have to think to yourself, is the market changing? Is this long term changing for the long term? Is it just changing for this week? Is it just changing for this month? So you kind of always got to evaluate. You always have to adapt to the market and really just kind of take it in, like what's happening here? Why am I losing? The reason why you're losing sometimes not always your fault, and you can't always identify the way that you were trading has to change based on the market. Matthew, man, thanks for the $10. You guys with the donations today, really, thank you. I don't know what to say. Thank you, man. IBM, if you're looking at this too. Last 3 days, so I've been trading this. I mean, we made some money from here to 114 up to 120 earlier in the week. But if you're looking at these charts here, we had range bound between 120 and like 121, just range bound for 3 days. But if you look at today's chart, I mean, this is a pretty intense coil up. So that's why I placed another trade on IBM. Is due to this coil up right here for next week. I wasn't going to place trades this week into next week, but some of these charts, because there wasn't any movement, it's a good time to put positions on. And when charts are tight like this, and like Square today, Like if you're looking here, squares flat for most of the day. Yes, we had some action a little bit, but most of the day, it's a good time to, it's a good time to put a position on, because implied volatility deflates a little bit, option prices are deflated, calls are deflated, puts are deflated. So if you want to put a strangle play on or something like that, a two-sided play, you want it to be flat, so that way you can put the trades on. First week 1,000 plus. Congrats, man. Man, I'm happy for you. Feels good. Feels good. I'm feeling good for you. I got paid because you showed me the way. No, you got paid because you executed the vision. I tried to execute the vision this week and I only made $50, so it wasn't me, man. It was all you. That was all you. But let's get to it. Enough about me. What do you guys think? Any questions? You guys want to look at any tickers? Any questions about the week? How'd you guys do? I know a lot of you guys got paid. I know a lot of you guys lost. It was kind of mixed. Try to get there to some of these comments. I was kind of in the zone there for a little bit, so I apologize if I ignored some of these comments. I don't intentionally mean to ignore you guys. People think she's going back up to $20. Excellent. Like, it could go to $20 just as equally as it can go to $1. But more likely $1, right? Question on Theta over the weekend. Is it calculated per day? Yes, I will actually. I did post in Discord. I'll post a link, Joshua, on that. I'll answer that in more detail for you. But yeah, Theta is taken out over the weekend as well. Billy, do you sell iron condors or spreads when IB is higher? So Alex, I do. And it looks like we may be getting more into premium selling. So the reason why in October and November, December, I stayed away from selling, because you're kind of thinking, hey, why aren't you selling premium when IV's 100, or some of these weeks it's above 100 IV rank for some of the weeks and options, stuff like that. And the reason why is because it costs a lot of capital, and we kept going against the expected moves. I was trading, pretty much every day, day in, day out, and the option sellers were just getting slaughtered. It was, you kind of have to take a look at when I do a trade. I've talked about this a couple times. You have to see which ways the market can screw you, and if those reasons pile up, I choose to kind of look at the market a different way. And at the time, when we kept going beyond the expected move, people were like, man, I can't believe we keep going beyond the expected move. I can't believe we keep going beyond the expected move. When you're getting paid when you buy options, the option seller is taking the hit. The option seller is taking the hit. So, for me, it was difficult to sell options. I did do it a couple times, but it was a lot of risk. I had to play a lot of defense, and I had to be really aggressive to make money. And I find that it was easier just to buy strangles, honestly. It was easier to make money doing strangles. Now, that may change. The way that I trade right now, it may change, and it looks like it needs to shift a little bit based on, the action. But, that's just the way it goes. You always got to adapt. You always got to change. Brian, appreciate you pinning that link, man. You want to stay within the So when you're selling premium, you want to be within the expected move. Like right now, on the S&Ps, moves like this last 3 days, obviously from here to here, not in the expected move. But if you're between 2,600 and like 2570, we have this nice action here. This is great for premium selling. Coil ups, great for premium selling. But as premium gets cheaper, on a coil up like that, you definitely want to take that position off. Option seller on this probably got screwed. It went from 147 down to 137 before turning out flat. So you gotta be very careful. However, if you were selling premium, like let's say Nvidia right here, it went from 147, came back down. Let's say your puts were in the money, you had to wait like 4 days for it to come back up. So you know, there was definitely money there for selling premium in NVIDIA based on this chart. So not saying that there's not money there. I'm just saying it depends on how you play it, how aggressive you play it. Like if you're just playing like if you're selling premium like 30 days out or so, you know, you're not going to be caring about a one-day move. If you're selling premium for this week, you might get a little nervous that it just dropped $10 in an hour, you know. So it's based on risk. So buying or selling options, buying options or shorting options, all depends on your risk for the week or the month and how much time you have to trade. Like if you could be aggressive, if you cannot be aggressive, you know, it is what it is. So let's see here. What other it was all Netflix, Coke plug. What other tickers you guys want to look at here? Let's see here. On what was I looking at? Let's go into how far out were you going in 2017? 2 weeks out. FC, I mainly in 2017 I mainly sold premium in Amazon, Tesla, Chipotle, and Google. Those were my top tickers of 2017, and I mostly sold weekly options. I was selling this week, or like when it got to Wednesday, I would push out. So I was doing like 5 days to 10 days out. Sergio, it is. The one thing that I want to point out here, guys, is the VIX. Now, if you don't know what the VIX is, it tracks volatility in the market, kind of gives us a gauge of when options are expensive, when options are cheap, when there's greed in the market, when there's fear in the market. You know, it's a nice little indicator to show you kind of where things are going. And you know, during the sell-off in December, we did peak out at 36. But now we're back below 18. Like I was saying back in here, you know, we were very range bound. It was really nice to trade between like say 25 and 17. So the one thing that I want to say is, you know, unless we keep getting up moves, be kind of cautious of VIX around the teen areas right now, because previously every time it got down to like 16, 17, we pop back up, got down to like 16 down here, pop back up, got down to 16 here, and pop back up. So we're getting close down to like 17, 16 range. I'm not saying that we're not going to go back down to 12 or anything like that, which we very well could, especially if the bull market kind of returns and we just kind of go up. But, you know, right here, I'm going to be concerned. I'm not saying I'm going to lay in short. I'm just going to be mindful of this coming up. And this earnings season, I said this before, this earnings season is going to be very, 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 very important. 2018, we just came off the first red year in 10 years, and it's very unlikely there's going to be a preceding red year. So 2019 statistically shouldn't be red, but we could still be red this year. You know, it seems like lately 2017 and 2018 were all about breaking stats. So, you know, I'm not saying this 2019 is going to be a green year, going to be a red year, or whatever the case is. I mean, it could be anything. You know, who knows? But just be mindful that the last couple times that we came back down here into the mid-teen areas, you know, the market sold off. So, you know, we still have some ways to go up. You know, we can go up to, you know, the market still hasn't breached this 2600 here on the S&Ps. We still haven't broken through 2600. Could this easily come back down to 2400, 2450? Definitely. I mean, definitely. Could this break up to 2800 and VIX goes to 12? Sure, it could. But when I trade, I just like to be very mindful of those indicators. For selling premium, I feel like 14. Yeah, FC, the problem with 2017 and selling that far out is because the problem with 2017 and volatility, if we look at the chart here, let's pull up. Let's go to verse 27. Okay, so let's go into Okay, imply. So the problem with here's 2017 FC. The problem with selling premium that far out, at least for me, it didn't work for me because we would have major lulls in IV, and if you're looking, this looks like it's high, but it's really not. If you're looking in the big scheme of things here, I mean, if you're looking here at we had single digits down here in terms of IV rank, and when IV popped up, it kind of hurt your positions. So for selling premium, I had to be very short term when selling premium, and as you can see, it would. If you were selling puts, you didn't really have any problems. But if you had iron condors and stuff and you had them like 40 days out, eventually it would become out of the money because the iron condors, because IV was so cheap, the range was so low, you had to get closer to in the money. And when we had the slow grinds up, eventually you started losing money the longer that you held. So it got tough. It got tough for holding like 30 days out, 45 days out, that kind of thing. Because volatility was so low, you had to get closer to in the money than you do right now. So, just like anything, there's no free money in the market. Like, it's always going to cost you something. There's always going to be risk in the market, whether you're buying premium, selling premium. Yes, certain market conditions allow for easier times in the market. Like, there's easier times, there's better times to sell premium, there's better times to buy premium. But nothing's free. I get comments all the time like, is it if I have a 75% probability of profit, am I going to win? Just because the stats in the fancy charts calculate a 75 to 90% probability of profit doesn't mean it's going to happen. They don't know. They're calculating the option pricing and the numbers in the platform. They're not counting for, so and so got sick at Chipotle. They're not counting for Trump shutting down the government. They're not accounting for any of that. They're just accounting for the numbers, expected move, and what people are paying for the options. And that's how they come up with those probability of profits. So it's best to do your own math and also your own due diligence. And that's why selling puts is so traded. I can't believe I was only holding stock. Could just buy it back at a higher price. 1 week out, SPX, 1 standard deviation. I'm going to paper trade. Yeah, give it a how might give it a shot. Nick literally explained VIX better than any professor I ever had. Man, that's crazy. I don't know, because I didn't go to school for finance. And the amount of college that I attended was, I don't know, collectively, not even 1 semester. So, I don't know. I don't know what to tell you, man. Whew. I feel like I'm talking a lot today, or at least talking fast. I don't know what you guys think. If you're new here, say what up. We definitely want to meet you. Welcome you to the EVH fam. So far, if this video was of value to you, hit the like button. If it's not of value to you, hit the dislike button. Billy, you think retail is pulling the market up? I don't think so. I think it's earnings. Retail's definitely not. Let's go back to, Macy's. Macy's took a big hit yesterday. They lowered their guidance. There's definitely some opportunity. I think there's definitely some opportunity here. I was actually going to look into some retail stocks, but I didn't want to go too heavy. So next week, I'm actually going to be looking at some retail stocks. Netflix, Macy's was down another 2%. They were down, like 15% yesterday, down another 2% today. Target reported some good numbers, so they recovered nicely off the drop there. Nordstrom was green today. I think if you're looking at Nordstrom, this was a nice trade yesterday if you're trading retail. Unfortunately, I wasn't at the desk for most of the day. But if you see this, I mean, it went from Nordstrom went from 49 down to 44-ish, and then came back up to 47. So there was definitely opportunity here in Nordstrom yesterday, and there was some today as well. Hopefully you exited those positions. So So I think this is earnings related. I think it's more about the banks and stock and tech stocks pushing up the market versus retail. But obviously that's my opinion. How about Tesla puts? Tesla Kila. So far the puts have not been rewarded. Let's see what we got here today. Yeah, I mean, definitely not rewarded. Had a nice $10 swing. Oh. Pretty much straight up all day. I mean, had some chop, but pretty much $10 swing. But we're getting close here. If we can get, it depends here if it's going to get rejected by 350 or if it's going to go up. And let's see if they have earnings on. Let's link this. Okay, so they don't have earnings till February, and Tesla's also going to be one of those stocks that, regardless of what the price is, I'm going to try to trade the pre earnings run up. It tends to do that as well, runs up before earnings, especially if it's sold off. However, unless it's like 400 or something, it may not run up. So you obviously got to be careful. Yeah, Kohl's was down 10% the other day. Yeah, I mean, retail, a lot of the businesses like Sears and all that, I mean, like, who didn't see Christmas of 2018? Carson's didn't see Christmas of 2018. Toys R Us didn't see Christmas of 2018. I'm sure there were some others, but those were the most notable ones. The thing about Kohl's, Target, and Walmart is that their clothes are cheaper. Macy's, I think, just struggles overall. I mean, you can kind of tell when you go into a store, just clothes are unfolded on the ground everywhere. It was terrible. You know? I still refer to old school Chipotle away. Yeah, Macy's is not good. Amazon should have good earnings. Yeah, I mean, you know, Amazon, if we're looking at Amazon here, you know, the one thing that is a little concerning here with Amazon, you know, coming down from 2000s, you know, again, we're making these lower highs, and we had this double top here at like 1780, 1775, and we haven't come back up here. So it's going to be interesting if we make another run up there. Like, was there a little pullback here, and then we're going to make another push up to 1800. But right now, it's got to break above this area here, and it's got to really break above 1845, 1850 range if we ever want to see 2000 again. You know, just crazy. But I would actually prefer, for myself, honestly, if Amazon trades range bound for a couple of years. I mean, or a year, or even a year. I mean, as you can see, for the last, well, anyone know the last time they had a pretty flat year? Amazon was back in here, like 2013 area. So it was only $300 though. But a lot of action in there. But compared to the chart, I mean, that was the flattest year in a while. But most of the time we've just been ripping up. Obviously 2018 and into 2019, as you can see comparatively, it's just been violent. This is the biggest rip downs that Amazon has seen on the chart. Obviously it's a lot more expensive, but I mean, it's getting violent, and I'm not saying this is like bubblish or anything. But I mean, if you're looking at the 1999 charts and 2000 charts, it looks a lot like this. You know, so you know, I'm not here to say that these stocks aren't going to grow, but at the same time, you got to be careful that at what point in time is there room for a $1 trillion company right now in the market? Apple was the first company to reach a $1 trillion market cap. They're not anymore, of course, but Amazon, Microsoft, and Apple. If you think about this, is would you think that market cap is appropriate or not? Is it overvalued? I wouldn't say it's undervalued, especially since the run. You know, it would definitely would be a nice pullback if we can get down to 1,000 on Amazon. Now I know that's most likely not going to happen, but I mean it doesn't seem too far off either. If we a few weeks ago we touched the 1,300s, you know, I wouldn't feel bad. You know, Amazon's still a great growth story and everything like that, and they still have a lot of potential with AWS. They still have a lot of potential with their marketplace and all that, and also the healthcare sector and whatever God knows else they're doing there. You know, people are trying to cure diabetes, they're trying to make cures for cancer, they're trying to get in different things. But you know, it wouldn't be the worst thing for Amazon to kind of retrace down into here, back into the thousands, back down to 1,000. I don't think it'll go down to 800 or 700 again, but you know, 500 billion market cap versus $1 trillion market cap. You know, you gotta be mindful of these market caps and not getting out of control here. You know, did the U.S. grow? The main thing that I see that the issue is that these companies are getting more expensive and everything like that, but wages in America haven't grown in 10 years. It's very dangerous, especially with how much debt we have. So I know this is getting a little like tinfoil hattish, but you know, I'm not saying anything that's not true. So you can look it up yourself. But U.S. wages haven't grown in like 10 years, and debt is increasing, yet our economy and market's still buzzing. I don't know. It doesn't seem like it adds up. I'm not saying that, you know, we're going to have the next big short here, but I'm not saying that we don't deserve red years. Yeah, ATVI. Kid, I was looking at that ATVI. They also had bad news. Had a nice gap down. But this actually ATVI would have been a good trade for me, honestly, because it came down to support. Volume is pretty good on these guys right here. You know, we had 18,000, 14,000. ATVI, it has been moving. I definitely maybe on Monday I'll actually open a trade on this. I do like playing off 52-week highs. I do like playing off of 52-week lows. And like I said earlier in the video, that support and resistance, I mean, those, like, that's why I traded GE. It sucked me in. Those support and resistance trades. Whew. What do you think about Jeff's pick and him getting a divorce Amazon? I don't know, man. I guess it happens. People get divorced for all sorts of reasons, and I guess cheating is one of them. You know, does it have any impact on Amazon? I don't think so, because she didn't really have a role in the company that impacted Amazon as a whole. Now, if Jeff Bezos left or gave up his role as CEO and stuff like that, then things might get crazy. Things might get crazy because they're going to lose their visionary, they're going to lose their founder, and as you guys can see with Apple, how that is panning out right now. Last couple minutes, anything else you guys want to cover? Anything else you guys want to say? Definitely appreciate you guys. You know, if it's your first time here, hit subscribe. We appreciate it. Things on YouTube have been popping off. It's all because of you guys. So thank you. Support and resistance, kid. I'm a nerd, man. I got like 2 friends in real life. I want to say Richard, Sergio, Matthew, thank you again for the donations. I really appreciate it. You know, you guys support day in, day out just by being here, but supporting financially. I mean, taking the time, donating. I mean, that's crazy. Like, thank you guys. Thank you so much. Tobin, Coca-Cola. Tobin, I think we talked about this a couple times. I generally don't trade stocks that aren't growth stocks, but if you're looking at Coke here, it's been consolidating. Yes, you can make some money on the ups or downs. IV is way down here. Let's see when they have earnings coming up. earnings February 8th. So they really need a catalyst to kind of move them out. But they've in this sell-off, they've been holding pretty steady though. But they, obviously they've come down from their highs, but still consolidating here. So if you're buying premium, the only thing that I would say about this is this can consolidate for the next month, and it could really bleed you out. Like if you're looking in here, or we had some down movement here, but from July all the way through October, it pretty much, we had some dips and some ripped ups, but it was pretty much the same place. So you have to, a stock like Coke, you have to start trading it once it breaks out of range. Took a great day off to study, get my mind right, Josh, nice. Get your mind right. Monday, we're going to get after it. We're gonna get these trades unlocked. I'm going to the next week with IBM, Caterpillar, and GE. So you guys stay green. It's always us versus herd. Appreciate you guys hanging out. Have a great weekend.